in terms of the interest rates. So on one side of the interest rates, we've seen a lot of capital flow into real estate investing, into the equities in terms of the publicly traded REITs. The non-traded REITs have had robust fundraising, as well as the private equity putting their capital to use in the real estate industry.
Welcome to BuzzHouse, a Baker Tilly podcast where you can find all the buzz around multifamily housing. I'm Don Bernards, the partner in charge of Baker Tilly's multifamily housing practice.
And I'm Garrett Gibson, a partner at Baker Tilly, also specializing in consulting on multifamily housing transactions across the country.
Each week, we'll bring you a guest or a topic in the multifamily housing industry that will help you win now and anticipate tomorrow. Let's get started. Back into the BuzzHouse today for a repeat performance. Our guest today is Brent Maier, a colleague of ours at Baker Tilly, who's the managing director in Baker Tilly's real estate valuation and advisory group. Brent, of course, is a repeat guest on the BuzzHouse, and we'll be talking to him today on what he and his team have observed for quarter one of 2022 in the multifamily housing industry. And we'll again have their full report and a link to our website. Before we dive into that discussion with Brent, we want to give you a few legislative and industry updates. In tax-related news, the Organization for Economic Cooperation and Development is pushing for a 15% global corporate minimum tax. You might say, well, how is this related to our multifamily and affordable housing industry? The minimum tax proposal has been agreed upon by about 140 countries as an effort to avoid a so-called race to the bottom, whereby countries lower domestic corporate tax rates to attract foreign investment. The housing tax credit industry has concerns and voiced these concerns to the Treasury that a company who may be paying tax effectively at lower than 15% domestically would be at risk of having to pay the tax to foreign countries, thereby jeopardizing the incentive to invest in domestic tax credits. The Biden administration noted that they are aware of this concern, and if this moves forward, we'll find a path to still incentivize investments in the low-income housing tax credit and similar credit industries. So a lot more to come about that. It's just interesting how the global dynamics, even can obviously weigh in on our affordable housing tax credit arena. Switching gears, the Department of Housing and Urban Development, or HUD, recently released its 2022 income limits, long-awaited income limits many people are looking forward to seeing. These, of course, determine eligibility for housing credit properties and HUD-assisted housing programs. HUD's estimated national median income for fiscal year 2022 is 12.5% higher on a nationwide basis than 2021, or at $90,000. Of the 2,600 individual income limits calculated, less than 1% decreased from 2021, with an average increase of 10.5%. And this has been quite significant in many of the underwriting of low housing tax credit projects we've been working on that have been waiting to see what those rents will be increased. And as I noted, 10.5%, across the country on average increases, and we've seen that 9%, 12%. So if you've got projects you're working towards closing, definitely take a look at those rent increases. Another note, HUD Secretary Marcia Fudge recently joined White House officials and other cabinet secretaries to announce equity action plans created by more than 90 federal agencies, including all cabinet level agencies, as called for in President Biden's executive order on advancing racial equity and support for underserved communities through the federal government. HUD's plan includes actions to reduce the racial homeownership gap and to center equity in the delivery of services to people experiencing homelessness. It also includes priorities related to procurement, fair housing, and civil rights. The Treasury Department's plan describes efforts it has taken to ensure that equity is at the center of the work we do and the programs we administer, including implementation of the American Rescue Plan, directing capital to community development financial institutions and minority depository institutions, and bringing on one of the most diverse leadership teams in Treasury's history. On a very related note, I'm very excited that Baker Tilly just held a conference in Milwaukee focusing on underrepresented developers and affordable housing. Over 150 people registered for the conference, which focused on underwriting, qualified allocation plans, development partners and development teams, and hurdles and pitfalls in projects, to finally thinking about how to scale your business. There was a lot of good discussion and networking, and we look forward to the next event, and we'll keep our listeners up to date on when that might be. Finally, the National Low Income Housing Coalition recently released its annual affordable housing report, something I definitely look forward to reading every year when it comes out. The report, entitled The Gap, shortage of affordable homes, strives to examine the factors contributing to challenges in affordable housing, as well as the geographic areas of greatest impact. The report indicates that, again, no state has an adequate supply of affordable housing, probably no surprise there, for its lowest income renters, with a nationwide shortage of around approximately 7 million units of housing. The report also strives to examine racial and ethnic disparities, as well as the impact of the COVID-19 pandemic. And we also will have a link to this report on our website. So just a lot of timely information in our industry. And with that, I'm actually going to turn over to Garrick and jump in our discussion with Brent. Garrick?
Thanks for that intro, Don, and thank goodness that we finally got those 2022 income limits published. Hello, Brent. Thanks for coming on once again. And for those listeners who may not have been introduced to you from your last visit to BuzzHouse, why don't you go ahead and start out by letting our listeners know about your background, what you're working on at Baker Tilly within our real estate advisory group.
Sure, Garrick. Thanks, first of all, for having me back on. Don, back into the BuzzHouse. Always enjoy spending time with you guys. So our team is providing analysis, advisory, and valuation to our clients, helping them understand market intelligence. We help them underwrite, provide due diligence, and real estate valuation analytics in and around transactions. We also do some compliance work with purchase price allocations and estate planning, et cetera. It's been a great move for us, and we continue to build out the team and are enjoying the growth that we've had over the last year or two.
All right. Well, thanks for that intro, Brent. Let's go ahead and dive into some questions around your Q1 report. So would you be able to touch on some of the overall economic issues we've been experiencing? It seems like inflation and the Ukraine conflict dominated the news. So would you also be able to comment on the continued cost of construction? Because I know that's an important thing going around the country. And finally, could you also address the rising interest rates we have seen, especially over this last month where it seemed like there was a large uptick?
Sure. So just to put in the context of multifamily construction costs, we saw those costs increase for the higher quality properties, approach 25% construction costs year over year. And we've seen similar increases for the lower quality construction, and those are hovering around 15% year over year. In terms of the interest rates, so on one side of the interest rates, we've seen a lot of capital flow into real estate investing, into the equities in terms of the publicly traded REITs. The non-traded REITs have had robust fundraising, as well as the private equity putting their capital to use in the real estate industry. So we're seeing a lot of demand on the investment side, both on the development in the multifamily space, but also acquiring existing properties. And the reason is real estate's a great inflationary hedge to protect your capital. And the reason being, obviously, you have rent growth. So it's a great way to protect your investments. On the other side of that, of course, is what we just spoke about, and that's the increase in construction costs. At some point, we are going to see the interest rate increase affect the cost of debt. The Fed just recently indicated they're looking to increase their rates by 50 bips, and we saw the market react to that today as part of the downswing.
Brent, thanks for that quick summary. Switching specifically to multifamily, what have you seen so far as occupancies and rent growth in the first quarter?
We saw occupancy dip ever so slightly in the first quarter from Q4. I think that's largely attributed to supply side, but with vacancy rates at historic lows, rent increases have persisted. And not surprisingly, the Sunbelt markets were leaders, with many exceeding 20% year over year rent increases. Rent growth across quality and geographic areas is robust given the demographics and supply constraints. Interestingly, many of the units under construction are mid or high-rise units, which won't come online for another year or two. So we will see supply constraints for the foreseeable future. As far as rent growth, we've seen rent growth subside slightly in Q1, but still at elevated levels.
And thanks a lot for those insights. Just thinking of, issues, the kind of the broader economy has seen, over the last, through the pandemic and into the first quarter. There's a lot of discussion about, labor and supply chain. And of course, we know that that hits like, construction. Is your analysis, what's that show even like, operations? Or are we seeing an impact on those types of things just operating, multifamily real estate?
Sure. The labor market is tight, and that's across industries. No one is safe from the tightening in terms of available labor. What we've seen is a lot of labor trade up. So if you're providing maintenance at maybe an apartment building, you may be able to trade up to take a higher paying or higher wage employment elsewhere. So we're seeing a lot of competition for employees. And I think I spoke maybe in the last quarter or two about labor chasing even small increases, but what we've seen are large increases where sometimes it's 10% or more, where you have employees going to competitors or other opportunities to take advantage of the strong wage growth.
Thanks, Brent. Switching gears just slightly. So, we've heard a lot about the trend of single family home rentals. Would you be able to comment on trends in this residential rental market, including, programs that you're seeing around affordability?
Yes, we've seen continued interest and expanding in the single family rental. And I think something we're experiencing or witnessing, I should say, is this build to rent phenomenon where investors are looking to deploy more capital in one kind of transaction. And so they're working with home builders to take down entire neighborhoods in terms of providing a rental program in, let's say, one big rental, or excuse me, one big neighborhood. And so we're seeing that, and that's called are building these neighborhoods with the idea of renting them out to end users.
So on that point, I mean, can you comment, what do you think that might possibly do to just a normal single family purchasing market?
Well, we've seen robust growth, right, in single family home values. Median home prices are up significantly year over year. However, the demographics have shifted where end users don't mind renting, where even 5 years ago that looked and was much different in terms of the end user, and the end result is it's driving prices up, specifically in the Sunbelt markets or in destinations where families want to vacation. So we're seeing robust growth in vacation rental areas.
Awesome. Thanks for that.
You're good. No, it was very good to have Brent on the BuzzHouse today. Brent, we really appreciate you joining us. And listeners, thank you for tuning in today. Thank you for listening to BuzzHouse. To receive a notification when new episodes are available, please subscribe to BuzzHouse, a Baker Tilly podcast, wherever you get your podcasts. For additional resources around multifamily housing, check out bakertilly.com. And if you have a suggested topic, please send them to build@bakertilly.com. That's BUILD@bakertilly.com.